ಚಂಡದ ಮಳೆ ಕರವಲ್ಲಿ ಉದಕವಾಗಿರಬೇಕು, ಜಲಪ್ರಳಯವಾದಲ್ಲಿ ವಾಯುವಿನಂತಿರಬೇಕು, ಮಹಾಪ್ರಳಯವಾದಲ್ಲಿ ಆಕಾಶದಂತಿರಬೇಕು, ಗುಹೇಶ್ವರ ನಮ್ಮ ಲಿಂಗ ತಾನಾಗಿರಬೇಕು. ಹಾಗೆ ಈ ಎಲ್ಲ ಕಠಿಣ ಪರಿಶ್ರಮಗಳಲ್ಲಿ ನಾವು ಬಹಳ ಗಟ್ಟಿಯಾಗಿ ನಿಂತ್ಕೋಬೇಕು. ಅದುವೇ ನಮ್ಮ ಈ ಜ್ಞಾನದಾಸೋಹ ಲೈವ್ ವೆಬ್ಕಾಸ್ಟ್ ನ ಸೀರೀಸ್ ನ 20ನೇ ಸಂಚಿಕೆ. Dear members and the today's speaker, we have with us CA V Raghuraman sir. I wholeheartedly welcome CA V Raghuraman sir for the session.
Welcome sir.
Welcome you sir. Welcome you sir. Dear members, the today's session is issues in supply and deemed supply. It's going to be addressed by CA V Raghuraman sir. As you know, V Raghuraman sir needs no introduction, but the members that this live webcast is viewing by across the country and globe also. With the brief introduction, CA V Raghuraman sir is the first rank holder in BCom, 38th rank in CA Inter and 24th rank in CA Final, second rank in ICW Inter, 25th rank in ICW Final. This is all his career. If you see all his career, he's the last 30 years practicing as CA and advocate. Presently, he's practicing as an advocate. He's a faculty member of IIM and ICA Bangalore. He given the lectures across the country, and he authored the 2 books, Landmark International VAT Decisions, its relevance to India GST, and GST and Indirect Taxes Principles Demonstrated. With this very brief introduction, I am presenting before you CA V Raghuraman sir. Welcome you sir.
Welcome.
Members, the V Raghuraman sir, when GST is implementing in 2017, the ICA Indirect Taxes Committee has worked a lot. In that, Bangalore contribution is a taken major role in the ICA Indirect Tax Committee. The key member and important member contributed is none other than CA V Raghuraman sir. On behalf of, once again, I compliment V Raghuraman for his contribution towards the ICA Indirect Tax Committee, society in large, and he's made us chartered accountants proud in successful implementation of GST. Members, I welcome you also for this live webcast. This is the 20th in Bangalore Bank. Tomorrow we are having a session from CA Dr. N. Suresh, Recent Changes in Finance Act 2020 relating to charitable trust and institutions. Today's session definitely it will be an important session. Members, kindly make use this facility created by Bangalore branch, and the speaker has taken his own time and valuable time to present before you. Over to you, sir.
Thank you. I thank the Bangalore branch, especially the chairman, Mr. Ravindra, was a very dynamic person. His team has now found this technology very useful in the wake of what is happening in COVID. This has become a new methodology of doing sessions, and I can tell you this is going to stay for a long time to come, because it's very convenient for people to sit where they are and listen to at their leisure. So I thank the Bangalore branch once again for allowing me to share some views on an important topic. Thank you, sir. Now let us look at what I feel are some of the important issues in what is probably the most important topic in GST. As you all know, the charging section 9, which deals with GST, the charge is on supply of goods or services or both. That is what section 9 says. What is important for us to note is that we need to know what is supply before we get into and see what is the charging section. So if the next, I'm very confident the next 20-30 years we are going to spend trying to find out judicially what is supply. So in this session, we will go step by step through the definition and then find out what is supply. Now, if you look at the definition of supply, which is contained in section 7 of the Act, the CGST Act, which definition applies across the other legislations in GST. It starts off by saying scope of supply. The heading is scope of supply. That means the section 7 lays out what is the scope of supply. What do you mean by supply? What are all the things that it covers? The definition of supply is applicable throughout the Act. And if you look carefully, there are section 7 bracket 1 has 3 limbs, 7(1)(a), B, and C. Supply includes, it says. So the normally how we interpret this is that it's an inclusive definition. So 7(1)(a), 7(1)(b), 7(1)(c). There could also be other aspects in supply. This is one way of looking at it, saying that because it's an inclusive definition, it could include so many things which are not there, not specified in A, B, and C. It could be something more. People will draw their analogy from the Income Tax Act section 2 bracket 24, which says income includes, and it has over the years grown into several pages itself. But I would like to remind the viewers, in my humble opinion, that is not the way we have to look at the definition of supply. The first limb, 7(1)(a), exhausts supply. If you look carefully and see, what does it say? Supply includes all forms of supply, such as, we stop here. Supply includes all forms of supplies, such as. That means the first limb of the definition 7(1)(a), all forms of supplies are already included. They're already included. What are those forms? Sale, barter, rent, lease, license, whatever you may call it. Those are illustrations of the forms of supply. Sale is a form of supply. Barter is a form of supply. What do you mean by supply in general terminology? In UK, VAT, if you see, supply is not defined just like in Indian VAT. Supply means you are giving something to someone. Either you're rendering a service or you're giving over goods to someone. So the natural question that you'll ask is, supposing I just give my computer to my son, does it supply? When it comes to GST law, that is why the definition of supply specifically says all these forms, A, B, and C, given for a consideration in the course of furtherance of business. So it is not just mere supply or mere giving which is of importance. That mere giving should be qualified further by consideration. It should be qualified further that it should be in the course of furtherance of business. These two are very important qualifications, because if you see the history of UK VAT, 1973 they introduced this concept. When they introduced the concept in 1973, there was no concept of the course of furtherance of business, which came in much later with the 6th directive in 1978. When they introduced this concept of the course of furtherance of business. So we'll come back to 7(1)(a). Supply includes all forms of supply, such as sale. When you say such as means that it is illustrative. That means there can be many forms of supply. Many forms of supply can be there. But I am listing out a few. The section lists out a few: sale, transfer, rental, lease, etc. Whatever. Barter, exchange. Then we come to the second limb, which is very extremely important. The first limb itself says made or agreed to be made for consideration and the course of furtherance of business. So, in my view, this limb exhausts the definition of supply. 71B, 71C are transactions which are included in 71A, but there are some exceptions. They are accepted out of 71A. They act more like exceptions. What are they? If you look at 71B, import of services for a consideration, whether or not in the course of furtherance of business. This is very important. I told you, two limbs of the supply is the main category. It should be the course of furtherance of business and it should be for consideration. What is consideration is defined in 231. Monetary consideration, forbearance. These are all. What do you mean by consideration? Let us look at it in a layman's terminology. Let's not get into 2Ds, Sale of Goods Act or 231 of the CGS Act for a moment. We'll look at layman's consideration. What is called quid pro quo? That means to say, quid pro quo has been running the world from day when we were born. It is there in the Vedas. I will do yagas I do for getting rain. Quid pro quo. So this quid pro quo means I do something for you, expecting you to do something for me in return. This is called quid pro quo. Consideration means just this. I will do something to you. You do in return something to me. This is layman's terminology. If this consideration is not there, it is not a supply. We should remember this. In GST, supply should be compulsorily for consideration. There are some exceptions which we will deal with later. If that consideration is not there, there is no supply as far as GST is concerned. Similarly, it should be the course of furtherance of business. This is very important. What do you mean course of furtherance of business? Business is defined in section 2 bracket 17 to include several categories. It simply means that business has been defined by the Supreme Court and even the Privy Council in so many decisions. Some continuous activity should take place. Normally, the intention should be profit or profit motive. Though by definition they have taken out the profit motive. There should be some regularity in transactions. Though by definition they have accepted and said even one-off transactions can be brought to tax. But please understand this. Even if one-off transactions can be brought to tax, it should be in the nature of business. That means I should have that motive to continue. I should have had that motive to make profit. You may dispense with these conditions, but business in itself, in general terminology, means that I am doing something with some regularity. Business will include professions. Business includes occupations as per the Article 19, trade, commerce, manufacture. All this comes within the vocations are included. Occupations are not included. I can stand corrected there. Vocations are included. Occupation is not included. So if it's in the course of furtherance of business and there is a consideration, then that supply will be subject matter of tax under the GST law. The first exception, in my opinion, the first exception is imports for a consideration. whether or not in the course of other services. Why I say these are exceptions is import is also a form of supply, but the law says it is a supply. It is made for a consideration. Whether it's the course of furtherance of business or not. I'm not worried whether it's the course of furtherance of business, but import of services, for example, will be subjected to tax. Whereas import of goods, it is already covered in 7 as a supply. That is why the IGST Act has to be read along with this. Import of services, whether or not course of furtherance of business, but should be for a consideration. If it is not there for consideration, import of services cannot be subjected to tax unless they fall under Schedule 1, which we will look at after some. Activity specified in Schedule 1, where there is no consideration. I agree to make certain activities in Schedule 1. With or without consideration, this is 7.1c. This is also an exception to 7.1a. It should fall within supply. But those activities in Schedule 1, I need not have consideration at all. These are those activities which fall within the scope of supply, still, even though they're not without consideration. What are those activities which fall in Schedule 1, which can be done without consideration? This is also largely borrowed from the UK VAT. If you look at it, permanent transfer of assets, that is business assets, not your personal assets, permanent transfer of business assets, where input tax credit has been availed on such assets. So if you look at it, permanent transfer of assets, which are business assets, on which input tax credit has been availed, even if they are meant to be done without consideration, they will become a supplier as per 7.1c of the Act read with Schedule. Second, Schedule 1, supply of goods or services between related or distinct persons when made in the course of furtherance of business, but without consideration. Each of these aspects we will see carefully and more fully. 3. Supply of goods. Principal to agent, agent to principal. Import of services from related parties, even if it's without consideration, it will be called a supply. These are the transactions in Schedule 1, which, even though made without consideration, will fall in supply. Before we go to the other schedules, 2 and 3, let us look at some issues which can come. The GST law in India says supply by one person. It does not talk of supply to another person. So can self-supplies be brought to tax? Is the question that arises. This is a question that has been vexing tax authorities across several continents, including India. Should there be two persons for the purpose of GST levy, or just one person sufficient? Can I bring to tax transactions made by myself for myself? The GST definition does not talk of supply by one person to another person. There is no express mention of to another person by in the definition of supply in section 7. Does it therefore mean that there's no necessity for the second person to be present? That is the question which we have to answer. When we look at the definition of supply, The general definition of supply 71A, which says supply should be made for a consideration. When you say supply should be made for consideration, consideration means that there should be a promiser, that there should be a promisee. If two persons are not involved, the question of there being a consideration does not arise, because, as I told you, in general terminology, consideration means quid pro quo. I expect another person to do something for me. In return, I do this for him. So consideration means two persons should be present. And if two persons will have to be present, self-supply cannot be bought to tax. They can be bought to tax only by exception, not as a rule. That is what Schedule 1 does. When you say supply by related person or distinct persons, a head office and a branch is one person, one business entity, artificially split for the purpose of registration and recognition of the fact that they may be in different states of the country. Otherwise, they are not distinct persons. They are only one person. You have bought them to tax artificially through schedule. Otherwise, they can't be bought to tax. That is why you have 71C, which says even without consideration, we are going to bring you to tax. So it's an exception. 71C is an exception to 71. This is why I told you that this definition is not like the income tax definition, which sets out what is income, profits and gains, etc., etc., etc. This is a definition which sets out the general scope of supply in 71A and gives two exceptions in 71B and 71C. Restricts. 71B is restricted. 71C is restricted. And this is how we should read it. 71B gets rid of whether in the course of business. 71C talks of no consideration. Those two exceptions. Two persons, I told you, is a necessity for there to be a GST. When you say two persons are necessary, let us look at partnerships. What is a partnership? See, because most of the chartered accountants ask this question. A partner gets a remuneration from the partnership firm. Do you call this as a service done by the partner to the partnership firm? The answer is no. The celebrated decision of the Supreme Court in Addanki's case, AIR 1966, Addanki Narayanappa's case, AIR 1966, we say partner and partnership are one and the same. There is no difference between them. Partnership firm is only a method of calling them. Otherwise, they are individuals. Even when it comes to taxation law, though the term person as defined in the GST law or even the income tax talks of individual, firm, partnership firm, LLPs are all listed. That is only for the purpose of assessing the taxes. The general concept that a partner and partnership firm are one and the same has been laid out in Chidambaram Pillai's case. It's a celebrated decision in 1977. One SCC. You find this decision in Chidambaram Pillai's case as a celebrated decision. It says partnership firm partners are one and the same. You may call them the. So, if a remuneration is taken from the partnership firm, it is nothing but share of profit. The profits in the firm can be taken out by several methodologies. Maybe taken out as share of profits itself, may be taken out as remuneration, salary, etc. Whatever you make. Fact of the matter is that partner and partnership firms are one and the same. And their interstate transactions are not supply because there is no two persons involved. This is very important for us. So therefore, no GST can come to play between partners and partnership firms who are only sharing the profits of business carried on by one or all of them on behalf of the others. So this is the first point that we should keep in consideration. Then let us look at certain mutual benefit societies, members clubs which are there. Many people tell that what happens to the clubs which are present in this country, associations which are present in this country. In fact, we had the opportunity to argue this case on mutuality before the Supreme Court Calcutta Clubs case, which you are all aware. What did the Supreme Court say? Constitutional amendment was made to plug what they call deemed sales club to its members. The question that arose was, will mutuality still apply after constitution has been amended? I'm not talking of the normal legislative exercise like this GST Act. I'm talking of the constitution, the mother of all laws. 366(29)(a) subclass E was inserted. Similarly, in service tax law, the club and the members or association members were treated as distinct. But so when the Supreme Court considered this question in Calcutta Clubs case, they said even after the amendment to the Constitution, a members club is only a method of arranging one's affairs. They relied on Styles' decision. It's very famous. Several other decisions. You can incorporate your association, or it could be an unincorporated association. But fact of the matter is, incorporation or unincorporated associations are only meant for your own convenience. They act as your agents. So flat associations, which are that is your housing societies, your members clubs. Members clubs means within the members. These are all institutions where those who contribute and those who participate are the same. In Calcutta Clubs case, following the tradition, Supreme Court said in spite of the amendment to the definition in the Constitution or insertion of the 366(29)(a) subclass C, fact remains that club, the members club, and its associations are one and the same. Therefore, because there is no two persons, the question of consideration does not arise. And if that does not arise, the question of bringing them to tax, either sales tax or service tax, does not arise. Now you may ask me, the definition of business, clubs are included as those which give service of facilities to its members. Now you must be very careful with this definition. In spite of the inclusion of this in business, there is no deeming fiction to say that this is a consideration. In fact, there cannot be a consideration flowing from a club to the member or the member to the club where it's a members club. I make a distinction between members club on the one hand and other clubs. What is the distinction? Because the Calcutta Clubs case applies only to members clubs. They don't apply to the profit-making clubs. Standalone clubs which sell products to outsiders, non-members, are not included in this. Where there is an identity of those who participate and contribute, that becomes a members club. Resident Welfare Association, which is formed for the purpose of the flat maintenance of flats, is a classical example of a members club. These clubs do not have what they call, GST law may say it's in the course of furtherance of business, but there is no consideration. And if there's no consideration under 7(1)(a), there can be no tax. So you may have given them an exemption up to 7,500 rupees limit. You may have done all those things, but those have no consequence. Because what can't be brought to tax under the charging provisions, you can't bring them indirectly to tax through an exemption notification. Please remember this. There should be consideration. If consideration is not there, there is no consideration, there is no tax which flows. Please understand, tax is not on consideration, tax is on the activity of supply. This I think we should keep in mind. The tax is on the activity of supply. It's an activity tax. It is not a tax at a personal level, like the income tax. It's an activity tax. The distinction is made between a tax on goods and a tax on activity. Please see judgment of the Supreme Court in Godfrey Phillips case, AAR 2005, where they make this distinction beautifully. Where they study entry 62 to the list 2 in the 7th schedule to the Constitution. It's a beautiful judgment of Justice Ruma Paul, where she makes this study. What is activity tax? Tax on goods. The GST is a tax on activity. Activity of supply. Activity of supply. Activity of supply for a consideration. Activity of supply for a consideration in the course of furtherance of business. This is how you read this text. A house lady goes and surrenders her jewelry. It is not a, there could be consideration, but it is not in the course of furtherance of business. It's not a supply in the course of furtherance of business. This should be eminently kept in mind when you discuss or when you analyze the transaction of supply. Then we look at, and after I am seeing in a lot of WhatsApp, a lot of discussions going on directors' remuneration. Who is a director? How does the Companies Act deal with a director? A director is a person who has a fiduciary capacity vis-a-vis the company. He is in the position of a trustee. He is not an ordinary person. He has duties. When chartered accountants, lawyers like us should keep this in mind when we look at the GST law. There is a difference between supply duty. What is a duty? Cannot be brought to tax. What I do as my duty can't be brought to tax. My duty as a director is to safeguard the assets of the company. My duty as a director is to take care of the company's welfare. That is why the directors are given so much of responsibility. He stands in a fiduciary capacity. So the remuneration that he takes is towards a fiduciary capacity. It is not a person who has no proprietary interest. The director has proprietary interest, not that he's put in his money like shareholders, but he's a trustee for the company. He's a trustee for the shareholders. He has to take care of these assets. So while the managing director draws salary as a remuneration, the remuneration is controlled by the Companies Act. Why do they control the remuneration? The director is not just because he can take a lot of money and run away. It's not the issue. But as a fiduciary capacity, he has certain duties to be done. In my humble view, the director's capacity as a trustee cannot be brought to tax under the GST law on first principles. One has to probably fight these matters out in a court of law before it comes to some conclusion. But my humble view is that a director's remuneration, director's fees, irrespective of you bringing it to reverse charge or whatever you may call it, these aspects cannot be brought to tax. Secondly, as far as remuneration is concerned by managing director, there is no problem with this. He will comfortably take the protection, the schedule 3, which we will discuss later. But these are some of the points which you should keep in mind. Whether there is a supply of services by one person to another, and what is the capacity in which it is being done. These are two things we should keep in mind when we look at supply. Is that supply a supply of services for a consideration which he is doing as a profession, like chartered accountants or lawyers, or is he doing it as a duty? This is where I feel that there is a distinction. And you'll see that distinction when we discuss about government supplies of goods or services by the government. When we discuss it, we will see that more. So some of the issues that come here is mutuality, in my view. I reiterate, is an extremely important concept which is built into the GST. Because consideration is a must for GST to work. As I told you, I traced the history back to the UK VAT 1973 when it was introduced, and then how it became to 1978. The second aspect is, when we look at in the course of furtherance of business, it's a business tax. When we talk of business tax, we should understand that it's a tax of the activities carried out in a business. It's not going to be a tax on individual transactions that take place in a family life. When there is a business motive, there is consideration, because in business there's always consideration. Business always runs, as they say, on quid pro quo consideration. That is why it's a business tax. That is why a definition of business. When you see the definition of business also, there's one more aspect which I wanted to mention. I gave you an example of the clubs and member schemes. Clubs which give facilities or benefits to the members, they are said to do business. But when a club or an association is set up for the purpose of maintenance of the existing assets, they are not giving any facility or benefits to its members. They are set up for the convenience of maintenance of the assets. In fact, if you look at several of our laws in either our Apartment Owners Act or the rules that are framed there, and it is mandatory for example, flats to have associations. Mumbai, it is mandatory. Karnataka, it's mandatory. So much is the case in other states also. If it is mandatory for you to have an association, What does the association do? It is done for maintenance of the assets. They don't give any facilities or benefits to the members. Rather, they are statutorily recognized bodies, so as to say, for the purpose of maintenance. So they are not in the course of furtherance of business. They are only meant to maintain the assets. So this is another reason why the resident welfare associations cannot be brought to tax, or members clubs cannot be brought to tax, because they act merely as agents of the principal. These are some of the issues which I thought I could share with you on consideration and the concept of mutuality, which still, in my humble view, has found its way into the GST law as it is there in income tax law and in the service tax law. Now, let us look at Schedule 1. We go back to Schedule 1 and see how these transactions can be brought to tax. Let us look closely. Schedule 1 are transactions which is also found in the UK VAT. These are exceptions to the general rule that certain transactions can be taxed even if there is no consideration. Let us look at the issues that will come up here. The first activity in Schedule 1 is permanent transfer or disposal of business assets, where input tax credit has been availed. Now, avail the input tax credit of the business assets and they sell them without consideration. Because you have availed the input tax credit, GST law says if you sell them without consideration, you go to tax. Even if it's because you've taken the benefit of the credit. Next, you come to the second one. Supply of goods or services or both between related persons or between distinct persons, as specified in section 25, when made in the course of furtherance of business. Now, here I would like you to spend some time. Supposing I transfer a capital asset from the head office to the branch, will it come under entry 2? In my humble opinion, if it's a capital asset, it doesn't come within the clutches of entry 2 at all. It comes under the clutches of entry 1. Entry 2 has to be read out to say only those goods and services which you deal with, and not business assets which are transferred between entities, which come under purview of entry 1. So please keep this in mind. Now we look at entry 3. This applies only to supply of goods. Sorry. Come back to entry 2. They also say that if gifts are given by the employer to the employee up to 50,000, they will be not treated as a supply of goods or services. This is to ensure that small gifts which are given to employer-employee relationship are not bought within the ambit of taxation. But to my view, I do not know how good this will stand, because if we look at Schedule 3 and read it along with Section 7, any service by the employer to the employer which arises in the course of employment, arising out of employment or in the course of employment, cannot be subjected to tax. It's not that it should be there in the employment letter. If in the course of employment, the employer decides to, let us say, give something to the employer, I'm not sure whether Schedule 1 will apply at all. I will tell you why. If you look at Section 7 bracket 2, it specifically says notwithstanding anything in subsection 1. Transactions specified in Schedule 3 will will neither be supply of goods nor supply of services. So when you look at this entry, please keep in mind that gifts by the employer to the employee, my humble view, if they are the course of employment, it will be difficult to bring it to tax even if they are beyond 50,000 rupees. It's a matter which has to be contested in a court of law, no doubt about it. But this is my humble view. Coming to 3, this applies only to supply of goods between principal agent, agent principal. Even if it is done without consideration, it will be attracting a tax simply because this is made to ensure that the tax flows to the destination. Principal is in Karnataka, agent is in Maharashtra. Goods are dispatched by the principal in Karnataka to the person in Maharashtra, the agent. Tax will have to be paid even if it's without consideration for the reason that the tax flows to the consuming state. Then comes import of services by a person from a related person in the course of furtherance of business. We've already seen import of services for a consideration, whether or not in the course of the furtherance of business is already covered. So import of services which happens, with consideration is already subject to tax as a supply. It's already defined as a supply. It need not be in the course of furtherance of business. But here, what they say, the conditions are reversed. There may be no consideration, but if the import is from a related person, it would be subjected to tax. Now, this is where I think this clause is susceptible to challenge on the grounds of Article 14 of the Constitution. Why? Let me take an example. Let us assume that an unrelated company renders services free of cost to a company in India. There is a company in USA which renders the services to a company in India free of cost. Can you bring it to tax? You can't bring it to tax. Why do you bring it to tax only where it's a related person? This, if you look at Schedule 1 carefully and you go and trace it back to the UK VAT Act, why they introduced these transactions? It was an anti-avoidance measure. Schedule 1 in itself is an exception to 7(1)(a) because it was an anti-avoidance measure. Head office gives some free services to the branch. Head office is in UK, branch offices in India. Free services are given. You bring them to tax because otherwise there will be an avoidance, anti-avoidance. But there are two answers to this. One, if the branch can take credit, the matter ends. There is no avoidance at all. That is one argument. The second argument is that there is a genuine transaction where the head office renders a particular kind of service free of cost to anybody. Why should it be taxed at all in the hands of a branch who also receives it free of cost? So in a given case, if you can prove that the head office is rendering a particular service to unrelated parties free, in my humble view, the transaction between the head office and the branch cannot be taxed in those transactions. If it is done free. Free supplies, as has been also clarified by the department, free supplies cannot be bought to tax under the GST law because there is an absence of consideration. Supposing a chartered accountant tells his client, COVID, there is a genuine problem. I will render services free to you for the next 2 months. I mean, most of us, I think, are doing that only. What happens is when a service is done free of cost, the question of paying GST doesn't arise at all because you have taken a decision to give it free. There's no consideration. This aspect should be kept in mind when we discuss this. So, head office rendering services to a branch office free, where it does a similar service free to any unrelated parties, also cannot be brought to tax, is my proposition I'm laying out for the people who are attending this webinar. Otherwise, it will be hit by the tenets of Article 40. You can't subject the same transaction to tax when it is exempt elsewhere. Same transaction, you can't have unequal treatment of equals. This is what it is called. You cannot have unequal treatment of equals. It's a very important facet of Article 40. Equals should not be treated unequally, and unequals should not be treated equally. Both these aspects of Article 40 are present in several judgments. In fact, one of the leading judgments is Kunnathil Mupil Nayar's case, which is year 1961. We find this case where, irrespective of the type of land, uniform tax was levied by the state. Land may be good land, it may be bad land. Uniform tax was levied across all the lands. The Supreme Court said these are unequals, you can't treat them equally. In this case, the head office decides I will give services free to whomsoever it may. In such a case, whether the party is related or unrelated, the question of bringing it to tax on the absence of consideration cannot arise. Therefore, Schedule 1 Entry 4 is susceptible to this challenge in only those cases where there is a rendering of services free across the board by a particular organization. There is also another aspect which we should keep in mind when we discuss consideration. Probably I did not mention it. Government grants are given. You render some services. We have to be very clear with one thing. Government grants can never be bought to tax. They are not given as a quid pro quo for your rendering any services. You're doing some research and development. You're doing some other public activity. Government feels that you should be supported and they give you a grant. That is not consideration. Consideration means, please understand this. This is borrowed from the UK VAT again. Consideration should be direct. Remote consideration is of no use. Consideration means something which can be directly identified with the transaction. If it is remote to the transaction, it cannot be brought to tax. This is an important principle in the UK VAT, which is also found its way here. In other words, government grants is an indirect way. I grant you because I feel you have to be supported. It's a public interest measure. These grants cannot be brought to tax because there is an absence of consideration. So we have now seen, to summarize till now what we have seen is this. Supply means giving something, giving goods or giving services. 7(1)(a) is a, though it starts off with includes, is an exhaustive definition of what is supply. 7(1)(b) and C are exceptions to it. Supply, forms of supply are described in 7. Sale is a form of supply. Barter is a form of supply. Exchange is a form of supply. It should be made for consideration. which means there should be two people at least present. It should be the course of furtherance of business. That means the motive should be as recurring transactions. There should be the general motive. I'm not saying specific. General motive. 7.1b is imports for consideration. Whether or not in the course of business is an exception to 7.1a. 7.1c is an anti-avoidance measure only, and is transaction specified. 4 transactions are specified in Schedule 1. Even without consideration, they can be brought to tax. This is as far as 7.1a is. An extremely important amendment came about. There was on 7.1d, which was deleted. Transactions specified in Schedule 2 were deemed to be supplies. But the 7.1d was deleted with retrospective effect from 1/7/2017, and 7.1 capital A was introduced. What is the effect of this? 7.1 capital A says if the supplies, if I'll read it out for the benefit of those, because many people tend to miss this. Where certain activities or transactions constitute a supply in accordance with 7.1, then they will be classified in the manner in Schedule. If you look at Schedule 2 transactions, please keep this in mind. Schedule 2 is only a classification schedule. It has to pass the test of it being a supply of what? Goods or services. If there is no supply of goods or services of both, whatever Schedule 2 may say is of no use. This is where we come to an extremely important topic. Can immovable property transactions be brought to tax? What do you mean by immovable property? I've described in so many other webinars. But keep this in mind. If you see the Association of Leasing Companies decision of the Supreme Court in 2011 SCC, read it with the All India Tax Practitioners Federation case in 2007 SCC. These two decisions will say goods and services are the same. The distinction between goods and services has become very thin and narrow, but they serve the same purpose. They serve the same purpose. What is it? To satisfy human needs. So the Constitution defines services as anything other than goods. It does not mean everything. Please understand. Anything does not mean everything. That is why the state lists 2 were never amended. Entry 18 or entry 49 of the state list was not amended. Finance Minister specifically said we don't want to bring immovable property transactions into the GST tax net as yet. There has to be consensus for it. When you say the tax is on goods and services, there should be a supply of goods and services. If there's no supply of goods and services, the question of bringing it to tax through Schedule 2 does not arise. So please keep this in mind because of the amendment to section 7.1 capital A as a deletion of 7.1d. Transactions specified in Schedule 2 do not automatically come to tax. You should still satisfy that they are supply of goods or services. This is where there's a fundamental mistake made by the Indian legislature. I'm sorry to say this. When they borrowed this Schedule 2 types of transactions from the UK VAT, the UK VAT structure is different. Transactions of sale in land and buildings are treated as goods tax. In some cases, service taxes in certain other cases. So they use the same concept in Schedule. What is that concept? It's a simple concept. UK where the concept is this. If I transfer the title in a goods, if I transfer the title, it becomes a supply of goods. If I transfer rights, it becomes supply of services. So when I transfer the title, it becomes goods. It transfer certain rights, it becomes services. So when I sell you the machinery, it becomes supply of goods. But if I lease out the machinery, it becomes a supply of services. But please keep this in mind. It should be of movable property. And services means something which is akin to goods. Now, if you look at supply definition, it should be supply of goods, not interest in immovable property. Interest in immovable property is not goods, it is not services. It is interest in immovable property as per the Transfer of Property Act. Unlike the UK, where there's no distinction between these, in India you have a distinction because you have a federal structure in India. You don't have a federal structure in India. You have a federal structure here. You can't trample upon states' rights to collect taxes by putting some definition in a statute. Lease of land, I will treat it as service. Easement of land, I will treat it as service. This kind of legislations, fortunately, cannot be done. And that is why rightly they have said, unless it is a supply of goods or services, it cannot be politics. Why I am emphasizing on this is that I've seen a lot of AR decisions and discussions going on with say sale of a plot can be bought to GST. It's the funniest proposition I've heard. Sale of plot is sale of immobile property. You can't bring it to tax under the GST by relying on Schedule 2. Schedule 2 is nothing but a classification schedule. If it is a supply, then you classify this. If it is not a supply, you cannot classify. You can't go to Schedule 2. So please keep this this is a very important issue that is going to come up in the courts of law. With the sale of building can be brought to tax at all. With the sale of constructed buildings, in construction buildings can be brought to tax at all. Are you entrenching into the shoes of the state? Why I'll tell you, this very question is now before the Supreme Court. A 9-member bench has been constituted. Mineral Area Development Authority, you'll find this reported in 2011 STC. What is the question? Question is whether the state can collect direct and indirect taxes under entry 18 and entry 49. When you say taxes on land and buildings in entry 49 to list 2, which is included within the state's jurisdiction, does it mean only direct taxes on land, or it also means indirect taxes on land? If the Supreme Court holds that it covers indirect taxes on land, also the state's jurisdiction, service tax will go out. All service tax levies will become illegal. GST will become illegal. So this important question now is before the Supreme Court. A 9 bench has been constituted for this purpose to determine whether entry 49 is only direct or it covers also indirect taxes. But dehors that, not even looking at it for a moment, please keep in mind that Schedule 2 can be looked into only if it is a supply of goods or services. So in my humble opinion, the entries in Schedule 2 relating to leasing of land and occupation of land and construction of property, works contract services can be challenged on the first principles, whether they can at all be included in Schedule 2. This is an important point which should be kept in mind. Now let us look at 7 bracket 2. 7 bracket 2 is an interesting concept. What does it say? Notwithstanding anything, it's very important. Notwithstanding anything contained in one activities or transactions specified in Schedule 3 cannot be subjected to tax. What do you mean by this? Let us come to Schedule 3. When we look at Schedule 3, what is the first entry in Schedule 3? Services by the employer to the employee, employee to the employer, the course of or in relation to. Let us take this and discuss at some length because it is causing a lot of problems. The Columbia Asia's AAR ruling is there, which is challenged the High Court and it's pending. Service by an employee to an employee, fine. The course of or in relation to. This is very important. Many people say this: if the employer gives meals to the employee, if service by employer to employee, it is not the other way around, and therefore it should be taxed. There are decisions also of the AARs and other things which seem to suggest this. It is not so. It is a payment made by the employer to the employee by virtue of or the course of his employment. Why? He might not make it to the employee directly. Employee welfare measures arise the course of employment. Employee welfare measures arise in relation to the employment. Please keep this in mind. Please see the judgment of the Andhra Pradesh High Court in Bhima's Hotels case, 3 GST. It is reported. What does the Andhra Pradesh High Court say? Employee welfare measures are not to be seen as service by employer to employee. No. There is no rendering of services. It's a beautiful decision by Justice Ram Subramanian sitting in the Supreme Court. Employer gives transportation facilities to the employees. He's giving it all employees. It's in the course of employment. It's in relation to employment. He gives food to the employees. It's in relation to employment. You can't bring it to tax. It's not a service done by the employer to the employee. No. Similarly, deductions. Employee leaves prematurely without giving notice period. It's the course of employment. Cannot be brought to tax. If you have to say it's terminating the employment, it's not in the course of employment. There are sufficient decisions in the European Court of Justice which says there's no service being rendered for these kind of contracts. There is no supply. You can't bring it within what they call agreeing to an obligation, tolerate an act or situation. The European Court of Justice in Chakran Mohar's case and so many other cases says supply means something positive, something where value is added. Supply does not mean negative. Value should be added. Then only there is supply. Please understand. The concept of value added tax means I should add value in a supply chain. Negative covenants which give rise to payments are not to be subjected to any tax, irrespective of its mentioned in Schedule 2. Agreeing to obligations mentioned in Schedule 2, but that cannot be brought to tax because you have judgments of the European Court of Justice. Even the Madras High Court has now taken a view that employee-related retentions because he has left the employment and not served the notice period. There is no service element in it. So Schedule 3 are transactions which are not at all neither a supply of service nor is it a supply of goods. So this is as far as employee relationships are concerned. There we come to another funny entry. I'm only dealing with issues I'm not dealing with all the entries. I'm dealing with issues in these entries. Sale of land and subject to clause B of paragraph 5 of Schedule 2, sale of building. Many people have taken different interpretations to say only sale of land is excluded from GST levy. If it's a lease of land, it will automatically GST levy will be attracted. Only sale of building is let out. That's completed building, not others. Now I ask all of these people one simple question. Let us assume Schedule 3 does not have sale of land tomorrow. It is deleted. Can you bring it to tax under the GST law? You can't. You cannot bring it to tax under the GST for a simple reason. It is not supply of goods or services. There is something in law called ex abundanti cautela. Ex abundanti cautela means by way of abundant caution. I am including certain things in Schedule 3 by way of abundant caution to clarify that these cannot be considered as supply of goods or services. Abundant caution. So sale of land, sale of completed buildings is put in the schedule by way of abundant caution and not taxed. So please keep this in mind before we interpret the schedules. And keep this in mind also. Schedule 3 has overriding powers because section 7 bracket 2 overrides 7 bracket 1. That is the view by which we had the Columbia Asia's writ petition admitted, saying that employees of head office are also employees of the branch office. If he renders services to the head office, he's rendering services to the branch office. You cannot see his employee of the branch office alone and not of the head office. If he's an employee, he's an employee of the whole company. There's no question of dividing him artificially. And if some service is there in the course of employment, cannot be brought to tax directly, it cannot be brought to tax indirectly. It's a very important principle in law. What you can't do directly, what is not permitted to be done directly, cannot be permitted to be done indirectly. So if you can't tax employees' costs directly because it is included in Schedule 3, you can't tax them indirectly by saying that it is distributed at that time I will tax it. It cannot be done. So keeping these employees in mind, I would say that the terminology in the course of employment or relation to employment is very wide, and it will cover not only costs that are incurred by the salary, but so many reimbursements that are also included. Because these are all arising in the course of it. It will also cover welfare activities that the employer does to the employee, in my humble opinion. Then let us come to actionable claims. What is an actionable claim? Claim to a debt which is not secured is an actionable claim. Beneficial interest in movable property is also actionable claim, which is recognized by the civil court. This is all in the transfer of property. I will not get deep into this. But remember, in GST law, actionable claims is taxed as goods, and only lottery, betting, and gambling are covered. All other actionable claims are out of GST. In other words, let us say an LIC policy. LIC policy, the benefit that arises in an LIC policy is an actionable claim. Lottery tickets is an actionable claim. Lottery tickets becomes taxed as goods because of Schedule 3. But LIC policy benefit which you get does not get taxed because though it is an actionable claim, the benefit that arises therefrom is specifically excluded by Schedule 3. It's very important for us to remember this. Then we come to certain other transactions which are kept in Schedule 3. Goods don't enter India. Taxation, there's no taxation for transactions between two non-taxable territories. Warehouse goods, please note this, very important. Supply of warehouse goods to any person before clearance for home consumption. Supply of goods by transfer of title before clearance of home consumption. This is why it is important. Earlier in the sales tax legislations, there have been conflicting decisions. If I bring in goods into the warehouse, and then let us say the bonded warehouse is held in my premises. If I bring in goods into the warehouse and then sell it to somebody inside the country, the Supreme Court says, unless this was done before the time of import, it will become a local sale. There are conflicting decisions, but the recent decision of the Supreme Court says that it will be taxed under the sales tax because you have imported, stocked it, and then only sold. It was not, the sale did not take place in the course of import. It took place after you put it into your warehouse. The decision is questionable, but we don't have that problem with the GST law because the terminology used in GST was very clear. Supply of warehouse goods to any person before clearance for home consumption. This is very important to keep note of. Even if you import the goods, keep it in your warehouse. If you have sold it after that also, since it is not cleared for home consumption, it is not a supply. Supply happens only when you clear it for home consumption. What do you mean by home consumption? It means when the goods go out of the warehouse and mixes with the other goods in the Indian territory. That is called home consumption in customs law. If you look at the decision of the Supreme Court, Kiran Spinning Mills, or even in Ashoka's case, where they discuss this concept beautifully. Import means goods are said to be imported when they are mixed with the rest of the goods in the Indian territory. That is called clearance for home consumption. So let us assume, I'll give you an example. Let us assume that I import certain goods and keep it in a warehouse. I sell those goods to another warehouse. Inter-warehouse transfers. That is not clearance for home consumption. No GST can come. The second warehouse then clears it into the Indian territory, then the GST levy. Then it becomes a supply. Till it is cleared from the warehouse, there is no supply. This is how you read Schedule 3. Some of the important terminologies in Schedule 3. Now let us look at one more aspect of 7, which is going to cause a lot of case loss in future. If you look, I told you 7.2 overrides 7.1 because it says notwithstanding anything contained. Activities, transactions specified in Schedule 3 shall be treated neither as supply of goods nor as a supply of services. Come to the second level. Such activities or transactions undertaken by the central or state government or local authority. When engaged as public authorities, this is very important. Does it mean that all activities of the government will be brought to tax? Is the question. No. Only when they are engaged as public authorities they can be brought to tax. Let me draw a parallel with what is the law in the UK, because that's where we borrowed substantial portion. If the government is in direct competition with private sector, GST is levied on those transactions. But when government is doing its statutory obligations, its governmental functions for which there is no competition per se, the question of bringing those transactions to GST arise. This has been an ongoing dispute between uh, governmental companies and other limbs as to what are functions that are important for governance. For example, let us assume that governmental organization is specialized in acquiring land for industries. You have the KIDB, for example, and several other governmental companies across the country. They do what is called a very important function of eminent domain. Eminent domain means the land which belongs to me, I can take it back to me anytime I want. I give the land to the citizens, but I can take it back anytime. I exercise the power of eminent domain because the land belongs to the state. I give you a just compensation, I can take it back from you for when I want to use it for public purposes. These are functions which are not entrusted at all to private organizations. There's no competition. These are governmental functions which they don't do as public authorities. They do it as governmental functions. That is why 7 bracket 2, when we read that it is public authorities means public authorities doing certain services. Please keep this 7 bracket 2 along with 7(1)(a). When government supplies goods or services as public authorities, then they can be brought to tax. Even then, some transactions can be left out because of 7 bracket 2. That is what how you read this section. You read this section in this way, I repeat. 7 bracket 2 is read this way. Normally, governmental functions do not come within GST unless they are in competition with private sector. Because you can't say that they are rendered in the course of furtherance of business. Government is not in the course of business, as our Prime Minister says. It's not our business to be in business. This has famous words. Government can be brought to tax when they render certain services or supply goods as public authorities. But that also, certain types of transactions the government can specify, the legislation can specify as being out of the purview of tax. For example, issuance of birth and death certificates. This is done by the government not as a governmental function but as a public authority. Please keep this distinction in mind. That is why they use public authority. Governmental functions can never be brought to tax because they are not the course of furtherance of business. But when they do something as public authorities, you have to see whether that can be brought to tax. Because there they're rendering a service. There they're supplying certain goods with the service. Even here under 7 bracket 2, certain transactions can be taken out of tax purview. That is what 7 bracket 2 says. So when you look at 7 bracket 2, you should look at those transactions keeping in mind that government in general cannot be brought to tax. In general. Therefore, even if you have exemption notifications issued saying government will be taxed for this, tax for that, you have to read it with a pinch of salt. The concepts in UK are very clear. They say that government is not in competition, we will not sustain the tax. The government is in competition with private sector. Yes, tax will be sustained. I believe a similar concept should be used for governmental transactions, where let us say government gives you compensation, takes the land. That is not a supply of goods or services, first of all. Second, it's a governmental function, which they will take the land and give it for industries. It's a public function, not as a public authority, but as a governmental function. Similarly, government does some service what I said, birth sentence. That can be bought to tax, but that under 7 bracket 2 is let out. Let out. So activities of government. My humble view, there's one decision of the Supreme Court, Ramtan societies. See that decision where they discuss what is a governmental function and then lay out principles that government does not do work for profit. There is no motive for profit at all. You say governmental functions means it is essentially things which are done in public interest. Essentially things which are done as a governmental function, only which what can government can do and private citizens or companies cannot do. Those types of transactions cannot be brought to tax, either under the industrial service tax law or under the present GST. So those type of governmental functions which are irrespective of an exemption being present or under 12 bar 2017, those functions cannot be brought to tax. But let us come to another situation where, let us say, a government company supplies goods, is manufacturing in these COVID days. Let us assume government companies make masks and supplies. Supply of masks, if otherwise not exempt, they have done in an emergency, they have done it. Government companies compete with private companies and supply. There's something called equal treatment to both because they're competing each other. Otherwise, it will distort the market. This is a very important concept the EU VAT, the European Union VAT, where they say that taxes should be uniform between competitors. Otherwise, it will tend to distort the market. For that reason, taxes have to be uniform. So, government companies, government organizations are competing with private organizations for the purpose of supplying any goods or services. In those cases, the levy of GST can be done. And the function of 7.2 says, even in those cases where government acts as public authorities, we can take them out of the tax limit. When you say public authorities, it means that they're doing certain things as governmental functions which only they can do. But there is a service element which could be taxed. But we are not going to tax them in because of the nature of transactions that take place. That is how you read 7 bracket 2. That has to be read in that 7 bracket 2 are transactions which can never be treated as supply of goods or supply of services. Both are out of this. They are out of this. Now let us look at what is 7 bracket 3. 7 bracket 3 is completely different. It is subjected to all the 7 bracket 1, 7 bracket 1A, and 7 bracket 2. And it says that the government may, on recommendation of the council by notification, specify that supply of goods could be treated as supply of certain transactions can be treated only as supply of goods, not services. Certain transactions could be treated only as supply of services and not supply of goods. But they are subjected to 7 bracket 1 or 7 bracket 2, 7 bracket 1A. For example, let us take, there are two composite supplies that we have to cover. One is in Schedule 2, you have mention of works contract and supply of food as part or parcel of services as composite supplies. These composite supplies are taken or treated as supply of services. I've already told you that Schedule 2 you cannot go in directly to tax. It should be supply of goods or services, then only you can come to Schedule 2. You look at these entries in Schedule 2. There are two composite supplies. It says, even though they are composite, there is a goods element, there is a service element. We are going to treat them as supply of services only. One is works contract services, where they say, respect of how it is, what is the goods element involved. Maybe 80% is good, 20% only is services. We will still treat them as supply of services, and they'll be taxed accordingly. So works contract will be taxed as a service in all cases. The definition of works contract is code 2 bracket 119, which talks of only immovable property transactions. This is the reason why I told you this is susceptible to challenge. Susceptible to challenge under Article 14 and Article 19 of the Constitution. There's also Article 265 of the Constitution. Now coming to the second entry, which is a very, very, very interesting entry, which I will read it out. When you look at Schedule 2, the entry which talks of supply of food as a part of services or even independent, that will become treated as supply of services, even though it's composite. All your hotel services become treated as supply of services. They're not treated as supply of goods at all. So you have the same situation that arose in Northern India caterers case, where the Supreme Court said when food is supplied by restaurant, it's a service. There is no sale of goods. That is what necessitated the insertion of subclause F in Article 366(29)(a), where they broke up the transaction and said in a hotel there is a sale of goods and there is a sale of service. Service element is also, though is involved, we'll treat it as sale of goods. Now, if you look at it carefully, the GST law puts the clock back and says, yes, we will follow Northern India caterers case. If there is a supply of food, in all cases it will be taxed as services. Though there is a service, because there is a service element predominant in supply of goods, especially food articles. Now let us come to what really is the effect. There's one aspect of this discussion which I have withheld back. Article 366(29)(a) continues to be in the Constitution. What is this Article 366(29)(a)? It was inserted to get over certain decisions of the High Courts and Supreme Courts, and to deem certain things as sale of goods. Works contract was deemed to be divisible into goods element and service element. Catering contracts were deemed to be split into sale and service elements. This definition continues even after the introduction of GST. What is the effect of this? If you look carefully at Builders Association's case, Supreme Court says this. They inserted Article 366(29)(a) in the definition clause, because Article 366 is the definition clause. They've introduced 29(a) in the definition clause, and this definition will apply throughout the Constitution. If that's the case, Can you define works contract as a service when the Constitution itself says that there is a deemed sale category? Can you say lease of immovable property is a service, or lease of movable property is a service when the Constitution says there is a deemed sale of those? Can you say catering contracts are a service when clause F of 366/29A with regard to hotels especially specifically says it can be split and deemed a sale of goods and services? This is a very large question which arises. What is the effect of Article 366/29 even today? Why is it still there in the Constitution? In fact, they wanted to delete it. The first stage, bill stage, they had actually removed it and then they brought it back. They had a doubt whether it should be there or it should not be there. But keeping it there, if you look at the decision of the Supreme Court Builders Association case, the Supreme Court specifically states that this definition will apply throughout the Constitution. That means to say, when you look at Article 246A, it says that it's a special provision for goods and services tax. That special provision will apply only if there's a tax on goods and services. It cannot apply to any tax on immovable property transactions. If you want to bring the tax to immovable property transactions to tax, it's impermissible. If you want to split them as goods and services, you are allowed to do that, but there should be a mechanism for splitting it into goods and services. And the present GST law does not have a mechanism for splitting it into goods and services because you deemed works contracts to be services and not the goods and services. You deemed leasing contracts to be services and not the goods element. You have divided, you have put all the catering contracts as services when there is a goods element. So therefore, this inherent contradiction that is there between 366/29A of the Constitution and the entries in Schedule 2 to the CGST Act, which defines how do you classify a transaction as goods or services, this contradiction has to be addressed only by the courts of this country. There is no conclusion that we can reach, but in my humble view, because this is my session and I have to give my view on this, my humble view, since the Schedule 2 straight away classifies these transactions either as goods or services and does not give the split, it is unconstitutional. The entries in Schedule 2, some of them are unconstitutional and have to be struck down. And therefore, the notifications that have been issued under 11/1/2017 bringing to tax certain transactions, or even 12/2017 exempting partially or wholly certain transactions which are covered by 366/29A seem to be unconstitutional. The entire entries relating to the real estate sector, in my view, cannot stand the test of law unless they cross this definitional clause in 366/29A is my humble view. And how they are going to cross it, what are the issues that will come up will be argued in the court. For example, I have myself filed a petition on this aspect. As also, there is one more aspect which I would like to discuss in this forum. Let us assume that you entered into a leasing transaction on 1/4/2017, that is before GST was introduced. And the lease rentals are payable after 1/7/2017 also. They may, let us say, lease of a car. You took a car on lease for 3 years on 1/4/2017. The lease will run up to 31/3/2020. The issue that arises is Can you levy a GST on the installments which come or are collected after 1/7/2017? The petition has been filed and admitted in Karnataka High Court because the substantial question of law that arises is the transfer of right to use the goods took place on 1/4/2017. Only the payment for it was deferred. If transfer of right to use the goods has occurred before GST law came into being, the question of bringing it to tax under the GST law does not arise. It should have been only taxed only under the erstwhile sales tax or the erstwhile service tax, as the case. It cannot be subjected to tax under GST at all because what is the tax? What is the levy on? The levy is on the transfer of right to use. The transfer of right to use has taken place before what's only the installments are getting recovered afterwards. There is no such question of every month the transfer of right to use is taking place. No. Transfer of right to use has already taken place on 1/4/2017. Default payment of the installments only gives the right for repossession. Transfer of right to use can be done only once. And once that is already done, then the question of it being subjected to tax again will not arise. So this is another important aspect which I thought I'd bring it to your notice. I think is it Chairman sir? Is it time that I should take questions and answers now?
Sir, you can take questions. There are many questions are popping.
Yes, very good. Now I will be ready to take questions and answers now because I've covered most of the aspects of supply. There are some more, which is topic can go on and on. Can go
Yes,
on
sir.
and on. Yes, sir.
Yeah, there is a question from Sir Allam Prabhu, sir.
Yes. Oh, our past chairman.
Yes, sir. Yes, sir.
Oh, with great respect, I should. Yes,
Whether or not in the course of furtherance of business, the first question is popping.
Partner introduce Kara. Adena ila. Whether or not the course of means business is a precondition. If business is not there at the time of import of a service, then it is out of service. He's absolutely right. He's absolutely right. Mr. Allama Prabhu, as usual, is right.
Sir, again, he's good.
Yes.
The partner introduced his car into firm as his capital contribution. Is this a supply made by him? Instead of car, if he introduce his own business stocks.
And already I have answered that question in my. I have told partner and partnership firm is one and the same. Please refer to the decision in Addanki Narayanappa's case AR 1966 and famous case of Chidambaram Pillai in Income Tax 1977 on SCC where they specifically tell this. Partner and partnership firm are one and the same. Introduction of capital is not supply, it is a capital. Business ಮಾಡಕ್ಕೆ capital ಮಾಡ್ತಾರೆ. So there is no question of if you can introduce into business stock, so capital contribution. It's not supply of goods or services.
And sir, next is if a director waives up his loan given to a company, does this become a supply in the hands of the director?
See, loan is given to the company, and company says, "I am not able to pay," or whatever reasons. Director says, "Okay, I am in a fiduciary capacity. I will waive this loan." There is no question of supply of money. Maximum it can come as supply of money from director to the, that is not in the GST law. It is not subjected to tax. And waiver of loan is not supply of goods or services. Alien service element illa, goods element. Therefore, it cannot be brought to tax, in my humble way.
The next question, sir, again, Schedule 1, Item 4. If a free service render is a new type of service for
first time in universe. Like COVID again.
No OME, no like, and FME not available on that day.
You see, please understand this. If some service is free, in my humble view, there cannot be tax whether it is related or unrelated person. And therefore, I, in the course of my speech itself, I said item 4 is subjected to, will be subjected to challenge under Article 14, because if I've decided to give something free, matter ends. There is no GST.
Sir, next is the employee welfare measures when not
Hmm.
listed in appointment letter
Yes.
given
Good
to the
question.
employee.
Right. Good question, but I am of the view it need not be listed in the appointment letter, because Schedule 3 does not talk of appointment letter. It only says in the course of employment or in relation to employment. It does not anywhere says employment letter ಇರಬೇಕು. Those factors are irrelevant for the purpose of Schedule 3. If it is in relation to employment, matter ends, there is no tax.
The next question is a company paid tax to settle the pending appeal and same is recovered from outgoing MD who was also a majority shareholder. Does this recovered amount is taxable in the hands of
This has nothing to do with any service being rendered. There are two things here. Recovery of amounts doesn't mean a service is rendered or supply of service or supply of goods. If this aspect of supply of goods and service is not there, recovery of amounts by itself will not amount. It could be income, maybe. You have to test it under the Income Tax Act. But under GST, in my humble view, there is no tax.
next question, sir. Whether agreeing to refrain or tolerate an act as per Schedule 2, where does this fall under scheme of supply under Section 7? Is it a supply of service? The question from Belgaum, the person sitting on.
Belagaminda,
Ah, sir.
Mr. Ganesh, Mr. Ganesh, the great person. Huh? See, this was introduced, if you see, in service tax itself as a declared services. What they wanted to bring in was aspects like non-compete fee. This is classified as supply of services under the GST law. But as I told you in the course of my speech, if this does not relate, this does not amount to uh, any value addition. If there is no value addition, there can be no tax. That is why I gave the example of the European Court of Justice decision in Jagran Mohar's case. Also, recent decision of the Madras High Court, where they say these employee recoveries cannot be brought to tax because there is no value addition. So therefore, this agreeing to refrain, tolerate, if it does not lead to value addition, it cannot be subjected to tax under GST, is my humble opinion. So you have liquidation, for example, uh, you don't supply the machinery within 2 months when you're supposed to supply. Some liquidated damages may be recovered from the supplier. This does not mean that the service is rendered. It's only a recovery of amounts. No tax will come in those transactions. My question has been skipped in Manoj Shah complaint ಮಾಡ್ತಾರೆ.
It's not visible in, sir. Manoj, please, can you ask it?
I'm not able to see the question.
Yeah, sir. I am also not able to see the question. Manoj, can you repeat your questions? You are not whatever is listed. We have asked all the questions.
What our questions are here, I think, are answered. Correct?
Correct, sir. Whatever it is.
Any further questions which anyone there who wants to ask can certainly ask. I am open to answering.
Mr. Manoj, your question is not came. If you are audible, you can send the question.
Bidi, ಬೇರೆ ಯಾರಾದ್ರೂ ಇದ್ರೆ any other questions?
No, sir.
New comments?
I am copying IGT. It is came, sir.
I participate in exhibition of which 50% reasonable principal who's in UK, whose products are distributed, is a reimbursement supply. Will it be export of service if it is a supply? It's a good question. You should ask the person who takes on place of supply rules, but still I will answer it. Reimbursement of expenses in itself, in my humble view, is not a supply. There should be supply of services by you to the party in UK. If you're only recovering expenses because it has also benefited him, that by itself will not lead to tax. And even if you were to say that it is going to be taxed, then it can be defended on the ground that it's an export of services. Yatish ಅವರು non-compete fee by film actor be agreeing. My view, even though they have said non-compete fee will be is why they introduced this provision. In my view, ಅಲ್ಲಿ ಏನು ವ್ಯಾಲ್ಯೂ ಅಡಿಷನ್ ಏನಿದೆ? We have to look at if there is value addition in this. If there is no value addition, this clause cannot be applied. GST doesn't come when there is no value addition. So non-compete fee by film actor or Mr. Keshav Murthy's question, compensation received from BESCOM for loss of crop. These are all not supplies. These are not supplies. These are simply reimbursement of losses. There's no underlying supply. There's no underlying value addition, and they cannot be bound to tax as per the decisions of the European Court of Justice.
I think questions are over, sir.
Very nice. Very good.
Thank you, sir. The subject issues in supply and deemed supply. So the 2 hour session I have taken it now very in simple manner. It is in for Bangalore branch. It is you supplied the Jnana Dasava to all the members. With all your knowledge you said. I still remember, sir, on July 1st GST day when we asked the GST day. You are the person handled the first session in Ambedkar Bhavan, and it was live telecasted by Chandana TV.
Yes,
So
and I can tell you this, I'm deeply indebted to the Bangalore branch.
it was
At that time, I think Mrs. Geeta was the chairman at that time.
yes, sir. Yes, sir.
Very much deeply indebted to the chairman and all the chairmen who have come.
It was a great session, sir. That was the beginning from the Bangalore branch sessions of GST, and today also it was sessions as went very well.
One more
The
question
members,
has come from Mr. Chandrasekhar.
yes, sir.
One of the partner of the firm is running the business in his personal capacity, and later its entire movable assets has been transferred to firm as additional capital. Does it mean, see, I've already many times told you that partner and partnership firm are one and the same. There is no consideration between the two. They can't be treated as supply by one to another. So in my humble view, because of those two case laws which I told you, there cannot be any tax in these transactions as far as GST laws are concerned. As telling you, I'm deeply indebted to your
thank you. So I am recalling and what is sir Allam Prabhu sir, and please take up this one also.
ಯಾವುದು ಹೇಳಲಿಲ್ಲ ಅಲ್ಲ ಅವರು. He has not given me the question. Take up this one also. I am ready. But what is that? Let him. I think he may be typing.
Okay, sir. So I am very much thankful from on behalf of Bangalore branch, sir, because whenever we say always you are practicing as advocate, we always say the proud chartered accountant is representing all the members in the present, showing his presence in the legal button also. So wherever you present that attached with the chartered accountant word, they always make us also very proud of your contribution to the indirect tax committee of ICI and successful implementation of GST. Today what we are seeing, the government, this one, the behind that ICI has worked a lot in ICI IDT committee, especially Bangalore. And Bangalore, the person like you, your contribution is a lot and lot more. I wish all on behalf of all the viewers and on behalf of managing committee members, I wholeheartedly thank you, sir. for sparing
Thank
your
you
time
very much.
and
Two things which I would like to mention.
yes, sir.
One is that you see, I start practice as a child accountant. It's like my mother for me.
Yes, sir.
So the institute is bigger than me. I have no one.
Yeah. Okay, sir. It is
That is
your
one.
big words.
Second, one Mr. Preetham, I think, has asked a question whether business assets used in Schedule 1 include stock in trade or restricts to fixed assets only. In my humble view, when I think I took this session, I was telling this difference. Supply of goods and services coming in entry 2 will cover stock in trade items, while entry 1 will cover only business assets which are permanently disposed, that means capital assets. That is my humble view on this. There is one more thing, sir. Can we take 1% composition as per? I don't understand this question at all. I think probably if you come within that turnover criteria of 20 lakhs, 50 lakhs, as the case may be, you can take composition up to certain things on 1% and certain things at 6%. And I thank the Bangalore branch very much for this.
Thank you, sir.
Thank
Thank you. Thank for always. We salute for your knowledge and we love to have once Corona is over. We love to have your physical presence in the branch programs.
Yes, certainly. I'm due to address the branch, after the coronavirus goes,
Yes,
and
sir.
I will.
We are waiting to receive at
Yes,
branch.
thank you, sir. Thank
So, dear members, I wholeheartedly thank all the viewers for your active participation in the Bangalore branch activities. Kindly note that tomorrow at same 4 o'clock, we have a session recent changes in Finance Act 2020 relating to charitable trusts and institutions by CA Dr. N. Suresh is going to address. So, keep on watching the Bangalore branch YouTube channel at 4 o'clock tomorrow. And once again, before concluding, I once again wholeheartedly thank CA V Raghuraman sir for his valuable time for sparing the knowledge for making this Jnana Dasoa fruitful. Thank you, sir. With that
thank you.
said,
Thank you. Thank you.
thanks.